Cryptocurrency has taken the world by storm, with many pundits and prominent authorities in the space consistently reiterating that we are very early in the adoption process. Thought leaders such as Kevin O'Leary, Cathie Wood, Raoul Pal, Michael Saylor, and Plan B have all stated that once Bitcoin becomes part of the sovereign wealth funds and the insurance funds allocation, cryptocurrency has truly hit the mainstream, and we can see a major uptick in the market cap. Bitcoin enthusiasts and early adopters understand the true sovereignty of the asset, and the mass adoption seems almost inevitable. But of course, there are always speed bumps along the way, and the latest speed bump seems to be the IMF. The International Monetary Fund is a financial institution that consists of 190 countries. The IMF states that its main mission is working to foster global monetary cooperation, secure financial stability, facilitate international trade, promote high employment and sustainable economic growth, and reduce poverty around the world. In simple terms, the IMF plays a central role in the management of balance of payments difficulties in international financial crisis. And as it currently stands, there is a worldwide financial crisis. Pundits are suggesting the eurozone is facing an economic crisis concurrent from the war in Ukraine. Food and energy prices are skyrocketing worldwide. The United States Federal Reserve has raised interest rates, and the Dow Jones has seen its worst days since 2020. The crypto market hasn't been immune to the crisis, as more than $128 billion in cryptocurrency market capitalization was wiped off in a matter of hours. Needless to say, worldwide, the economic outlook shows instability. And then there are countries that are truly having hardship economically. The Argentine peso has shown extreme volatility with soaring inflation, as the inflation rate is expected to reach 65.1% this year. This resulted in an explosion in cryptocurrency, where an unstable financial system and strong government intervention in the country's economy have pushed an increasing number of Argentines toward the decentralized cryptocurrency. According to Chain Analysis, Argentines earned $1.86 billion in cryptocurrency in 2021. Despite the billions earned, the cryptocurrency party might see drastic changes in the debt-laden South American country. In a 56-13 vote, Argentinian senators approved a $45 billion bailout deal with the International Monetary Fund that will help the country avoid an imminent default on its debts. Argentina was staring down a $2.8 billion payment due to the IMF by March 22nd, and a total of $39 billion in debt payments through 2023. The deal with the IMF had one eye-opening caveat in the agreement: discourage the use of cryptocurrencies. Economy Minister Martín Guzmán and Central Bank President Miguel Peche signed a letter of intent detailing Argentina's efforts to discourage the use of cryptocurrencies with a view to preventing money laundering, informality, and disintermediation, in order to further safeguard financial stability. The money laundering narrative, along with the energy narrative, has been the go-to FUD scenarios that authorities have used to discredit cryptocurrency. The raw data suggests that it isn't all about laundering. As reported by Chain Analysis, a blockchain analysis company that has been reporting fraud, money laundering, and illicit transactions going through the cryptocurrency ecosystem since 2017, money laundering accounted for just 0.05% of all cryptocurrency transaction volume in 2021, compared to the amount of laundered fiat currency, 5%, that makes up global GDP. Money laundering, fraud, and financial instability were not invented by cryptocurrency and have been an everlasting problem in the fiat world. Nonetheless, Argentina was forced to attach this clause in order to postpone its debts. In order to comply with the clause, Argentina's anti-money laundering regulator, the Unidad de Información Financiera, UFI, or Financial Information Unit, is working to add cryptocurrency service providers to its list of entities subject to reporting customer transactions, the Buenos Aires Times reported this week. This precarious situation for Argentina has created mixed emotions. Many Argentinian senators applauded the move to secure financing. In a speech to the Senate this week, Economy Minister Guzmán said the deal will enable the country to avoid a profound monetary and inflationary stress that would derail Argentina's economic recovery and have consequences on poverty, as reported by Al Jazeera. At the same time, some senators were outraged by the strings attached to the deal. The IMF deal will not only require a tough stance on cryptocurrencies, but will also force a reduction in government deficits, an increase in interest rates, and significant cuts to energy subsidies. Vice President Cristina Fernández de Kirchner and a left-wing coalition of senators published a letter titled "Los muertos no pagan las deudas," or "The dead don't pay their debts," in a sharp rebuke against the deal. While political parties argue about whether they approve or disapprove of the move, the real concern is the people of Argentina. Argentina's annual inflation rate rose to a whopping 52.3% in February, causing many Argentines to take their paychecks and immediately exchange it for cryptocurrency for protection. Two of the biggest crypto exchanges in Argentina, Lemon Cash and Ripio, reportedly have millions of active users. While we cannot definitely conclude exactly how this IMF clause will play out for the Argentines, as it's not a done deal, it's still an eye-opening move by the IMF to strong-arm their way into clamping down on crypto. It only makes one wonder if this is just the beginning of the IMF bullying debt-laden countries to turn their backs on cryptocurrency regardless of its impact on the people. What do you think of the IMF's clause? Where do you see this heading for Argentina? Leave a comment. If you found value in the content, please hit the like button as that greatly helps the channel. If you're not subscribed, make sure you hit the subscribe button as we put out daily content to keep you up to date on the latest news and commentary in the crypto market. Thanks for watching, and we'll see you in the next one.